Good day to Doctor and everyone. My name is Li Ziping and my matching number is 277598. So I will explain about the introduction and overview of financial technology, FinTech. So let's go about it. Financial technology, FinTech, is the term used to describe innovative technology aimed at improving and automating the delivery and consumption of financial services. FinTech can help organizations, entrepreneurs, and customers in managing their financial operations, processes, and personal finances more effectively. So it consists of techniques and specialized software used on computers and mobile phones. They are the timeline that show the history of the development of FinTech. It started in 1865. Telegraph developed to show that verification and speed both improve with immediate interaction. Next, the pen telegraph method was developed to verify signatures between Lyon and Paris. Then in 1866, international banking was made possible with the first transatlantic telegraph cable. Until 1960, computers became the next big innovation, and its function is to keep records more easily with computer database. And in 1960, automatic teller machine (ATM) were also developed with its existence, and it enhanced communication through teles and SWIFT. In 1990, customer and bank will have more access to their data by using internet. Next, in 2009, after the financial crisis, regulatory changes combined with a lack of confidence in banks allow new providers to enter the market. It brings the introduction of Bitcoin that focus on decentralized control. At the same time, smartphones grow. People will use them as their main method of accessing the internet and other financial services. Until current period, we can know that consumers and investors showing a strong desire for new goods and services. FinTech 3.0, with even established banks beginning to behave and identify as startups. Not only that, machine learning changed how we conduct business with bank and insurance providers. Next, there are two risks of FinTech in financial services. The first one is regulatory risk. The laws are either out of date or not comprehensive. For example, there are less strict rules and safety precautions governing digital wallets, deposits, and online lenders than traditional banks. The second risk is comparable vulnerability due to their similar technology stack. They are dependent on a small number of major cloud service provider mobile platforms such as Android and iOS. Then we come to the challenges of FinTech. The first one is significant digital transformation that will challenge the status quo of financial services. FinTech will challenge the status quo of financial services, and their efficiency, security, and convenience of these innovative approaches exceeds those of conventional banking system. We can see that when these new technologies have reached their full potential and are in high demand, established financial institutions have acquired the resources needed to put them into practice and maintain their competitiveness. The second challenge is encourage creativity and optimize the customer experience. Personalized customer service and optimized supply chains are the example of how the retail industry has embraced online and mobile commerce and integrating technology.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Asha binti Zainal. My matching number is 280328. Next, I will proceed with a brief discussion on the related literature review. The title of the first article is FinTech in India, Opportunities and Challenges, Journal of Banking and Insurance Research. The author of this article is Dr. C. Vijay and the year is 2019. From the first article, I can summarize that FinTech services in India are the fastest growing in the world, and the FinTech industry is changing financial services in India. According to NASSCOM, National Association of Software and Service Company, the Indian FinTech software market will increase to $2.4 billion by 2020 from the current $1.2 billion. Due mainly to an increase in e-commerce and smartphone penetration, the traditionally cash-driven Indian economy has responded well to the fintech prospect. The Indian government also focused on and encouraged the fintech industry and promotes new ideas and innovation. Plus, the government also encouraged everyone to embrace cashless technologies like digital wallets and internet banking. Financial technology innovation in India is an advantage for the Indian economy. Fintech services are more secure and user-friendly, and they can reduce their cost for financial services. The second article is FinTech and Financial Stability, Potential Influence of FinTech on Financial Stability, Risk and Benefit. Journal Central Banking Theory and Practice. The author of this article is Milena Vucinis, and the year is 2020. This article stated that supervisory mechanisms and regulations have become more stringent since the last global financial crisis. Apart from that, technological developments in financial services, commonly called fintech, have introduced new trends that provide fast peer-to-peer lending that directly matches lenders and borrowers. Fintech brings opportunities and benefits to market players and customers, but at the same time, it also brings risks. Technologically enabled financial innovations provide greater decentralization, wider diversification of products and services, and faster, more transparent, efficient, and broader access to financial services. Fintech could also pose threats to financial stability in terms of micro and macroeconomic risks. So, international institutions such as the Financial Stability Board and the International Monetary Fund are calling for international cooperation among national and international institutions with the aim of preventing the occurrence of potential risks and mitigating the likelihood that the risk develop posing.
Selamat sejahtera Doktor. My name is So Yu Hang and my entry number is 27756. Now, I will continue the literature review for the Article 3, 4 and 5. For the title for Article 3 is The Large Size of FinTech in Financial Service, a Qualitative Inquiry into FinTech Developer Perspective. The journal is International Journal of Bank Marketing. The author is Binda Sampat, Emmanuel Mukherjee, Nguyen Phong Nguyen. The year is 2022. For the article, I can summarize that although FinTech offer broad prospects for significant enhancement and fundamental change in financial service, it will also have the potential to create risks for individual organizations and also the society. This because, firstly, when FinTech develop in developing countries such as Nigeria, it will become difficult because the developing country weak technology infrastructure, data management challenge, and limited data access and smartphone adoption. In addition, the lack of privacy control in developing countries, the lack of skilled developer, and the brand drain of good developer are additional obstacles to the development of FinTech. Other than that, FinTech also find it hard to deal with illegal fee charged by internet lenders as the current regulatory framework are not able to fit new technology. Lastly, collaboration between bank and FinTech company also pose many cybersecurity threats to customers, such as data integrity, risk, data breach, and malware attacks. Next, the title for the Article 4 is Commercial Bank and FinTech Company in the Digital Transformation, Challenge for the Future. The journal is Journal of Business Management. The author is Tatjana Vasiljeва and Kristina Dukhanova. The year is 2016. For the article, I can summarize that the article was discussed about the challenge faced by FinTech especially in the Baltic region, particularly in comparison to the Nordic countries. Despite FinTech technology-driven improvement in the financial industry, traditional banks in the Baltic region maintain a strong market position due to factors like trust and security. Customer interest in FinTech, especially payment service, exist, but establishing reliability remains a challenge. Additionally, traditional banks can leverage regulatory control, while FinTech companies face limitation in regulatory control. Next, for the Article 5, the title is Financial Technology, Legal Challenge for Indonesia Financial Sector. The journal is Journal of Earth and Environmental Science. The author is Lastuti Abu Bakar and Tri Handayani. The year is 2018. For the article, I can summarize this. The article already highlight the rapid growth of the financial service sector in Indonesia, driven by various types of technology, particularly financial technology. FinTech in Indonesia encompasses services such as lending, borrowing, startups support, investment, and social activity. While FinTech offers advantages like cost efficiency and ease of financing, it also poses challenges and risks, including credit risk, technology limitation, misuse of funds, and data protection issues. To address this concern, Indonesia will have the multiple regulatory agencies such as the Financial Service Authority and Bank Indonesia. The regulatory approach focuses on managing risks related to customer protection and emphasize the need for information technology regulatory reform, particularly in preventing the misuse of personal data. That's all for me. Thank you.
Assalamualaikum Doctor. My name is Farishani Liminti Mazani. My matric number is 286204. I will talk about the insurance technology for the application of FinTech in Malaysia financial system. The development of the FinTech industry in Malaysia has encouraged various industries to use this technology facility. There is no exception for insurance company in Malaysia. Insurance company in Malaysia has expanded their service by offering insurance products using technology facilities. This has made the word InsurTech exist as a result of the combination of the word insurance and technology. It is very important for us to understand that industry that want to offer service and product related to safety of the public property will definitely be directed to comply with the rules and regulation created by the government. As a result, insurance company that want to offer this InsurTech service need to have a digital insurance and takaful operator license, D2. D2 license that the Malaysia Central Bank has established. For each company to qualify for this license, they must operate in a foundation phase for 3 to 5 years. In addition, they need to place and maintain a minimum paid-up capital for RM 40 million during the foundation phase. This paid-up capital is crucial because the insurance company can use it as a reserve to make sure that the amount of money is available for the emergency and always meet the level of the central bank request. In addition, it is also important to ensure the well-being of the insurance company if something bad happen in the future. In addition, to obtain a D2 license from BNM, insurance company must meet the standard and requirement. Among them, the company should ensure that the customer can choose any product or service offered independently or freely. Secondly, customer must be treated fairly and no operation should be done to them. Third, customers should be given sufficient information regarding each service and product offered. This is because to avoid misunderstanding, chaos, and losses to the company and also to the consumer. Finally, the company should do clear promotion and marketing material so that the customers always get true info about their product and services. Now let's look at the benefit of InsurTech for customer and insurance companies. First, InsurTech can satisfy customer needs. Customer need for a service or product can be met through the use of technology. Customer can customize and plan what they want, so it can create the best solution for evaluate customer behavior and a dynamic pricing model for companies. The second is convenient for the customer. This is because customers do not need to meet face-to-face or go to the store to get service. They can subscribe or pay or buy the insurance product over the internet wherever they are, regardless of time. The buying and selling process also can be carried out for 24 hours. Premium insurance payment can also be made online. The third advantage is that FinTech will provide new experience to customers and companies. This business can be done online and also traditionally. Communication between customer and agent can be done quickly in various ways with the medium of internet. This can be a new experience for both parties. The fourth advantage is that FinTech can improve efficiency. This is because FinTech can create an end-to-end system that allows customers to purchase policy, manage, track, and review policy, and file claim quickly and easily. Fifth, or last of benefit, is FinTech is also cost-effective for the company. This is because operating costs can be reduced with the existence of FinTech technology. Payments such as commission to the agent and spending on items such as paper, printing, and so on can save a lot. Therefore, for my part and for the conclusion, FinTech advancement provide customer with a comprehensive digital experience throughout the entire process of purchasing protection product, policy, takaful certificate, and filing claim. The application of FinTech in the insurance industry positively impacts customer requirements, particularly in handling unforeseen circumstances. Thank you. That's all from me. 286-204.
Assalamualaikum to Doctor and good day everyone. My name is Alia Azrimiti Ahmad Azli. My metric number is 295394. So basically I am going to talk about another application of FinTech in the Malaysian financial system. So before the digital payment solution evolved in Malaysia financial system, we as the Malaysians uses a lot of traditional payment method back then, as for example a cheque. It is a paper-based payment instrument where you need to write an order to bank to pay money to the beneficiaries. Now, anywhere and anytime, you can still make the payment transaction without having you to go to the bank or any financial institution due to the shift of traditional payment method towards the digital payment solution. And the highlights of the changes is due to several factors like reduced cash handling, convenience, accessibility, reduced transaction charge, and etc. For the next one, I am going to present about another application of FinTech in the Malaysian financial system, which is the digital payment solution. So basically, digital payment solutions is not like only one, like as all of us know, we only know like e-wallet. There's actually more than that. Other than e-wallet, we have open banking, buy now pay later, blockchain and cryptocurrency, and many more. So now I am going to explain about digital payment solution, specifically to e-wallet first. So basically, e-wallet is a type of electronic money which is used for transaction made online through a computer or a smartphone. So basically, the function of e-wallet is just the same as the credit card or debit card. But the thing that makes the difference between the e-wallet and all the credit and debit cards is e-wallet need to be linked to the individual's bank account to make payment. So basically, let's take example like Touch and Go e-wallet. We can use Touch and Go e-wallet or any other e-wallet applications to pay for our food, bills, top up and many more. Just simply by scanning the QR code, and it will bring us straight to the beneficiary account. Just enter the amount that you need to pay and we are all set to make the payment. So the examples of e-wallet application that is available in Malaysia is Touch and Go e-wallet, Boost, Maybank e-wallet applications and many more. So basically, as all of us know, the e-wallet applications that are available in Malaysia, mostly they have the same function. For example, we can scan the QR code to make payment. We can also make payment for our bills, and we also can top up our mobile data, and also we can link our bank account to the e-wallet applications. Mostly they have the same function, but the thing that makes the difference between e-wallet applications that are available in Malaysia is their loyalty program. Let's take example Touch and Go e-wallet versus the Boost. So basically, the loyalty program for Touch and Go e-wallet is called Go Rewards. So basically, how this Go Rewards function, when the users use their e-wallet in the Touch and Go e-wallet, each 1 ringgit will get a bonus point. With the bonus point that they collected, the more points they collected, the more special redemption rewards they will get. While for the Boost, their loyalty programs are called Shake Rewards. So basically, when we spend 10 ringgit to 19 ringgit 99 cents, we will get 1 Shake Reward. And when we spend 20 ringgit to 29 ringgit 99 cents, they will get 2 Shake Reward. And 30 ringgit and above, we will get 3 Shake Reward. So basically, the Shake Reward function, when we use the Boost app and we shake the rewards, we will get a lot of given vouchers to choose from, and with the vouchers we can use to purchase for a preferred discounted voucher. So basically, we can see the difference, the loyalty programs between Touch and Go e-wallet and also Boost. So for the next digital payment solutions is open banking. Open banking is a system that allows financial data to be accessed between banks and also third party by using application programming interfaces, APIs. So basically, open banking, it provides access to the account information such as the customer's names, age and address, and it also provides us with the transaction data of our accounts on how much money we have withdrawn, the deposits, and also other transactions. This is to verify the customer's identity so that nobody can hack into the customer's account, and it helps to link to other financial services. So basically, with this data, it basically helps the bank to create new tools such as personal financial management tools that can help us to organize our money. And it can tell us how many percentages we have spent our money on paying the bills, allowances, and many more. Normally, the banks will require us to accept some certain consent to access our financial information and personal data. This way, it is more secure as the bank asks permission first from the customers, and this can prevent the leakage of personal information from being wrongly used. As clearly we can see, open banking is the latest fintech that helps the fintech sector in Malaysia to expose to the innovation of technologies. For the next digital payment solution is Buy Now, Pay Later. Buy Now, Pay Later is a type of short-term financing that allows customers to make purchases and pay for them over time, usually with no interest. Buy Now, Pay Later gives the customer financial flexibility where they can delay the payment. This means the customer can purchase the items, especially the expensive one, at any time without having to collect the money until full amount, then only they can buy. Let's take example like Shopee Pay Later, where we call it as Pay Later. Firstly, you add to cart the items that you want to purchase. Next, you can choose payment option, whether you want to use as Pay Later or online banking. When you choose as Pay Later, there are options where we can pay installment for up to 3 months or 6 months. Then, we can place order by insert Shopee PIN. Next, we are going to have the as Pay Later bills. we have multiple payment options for the bills, such as you want to cut down the money from the Shopee Pay or debit or credit card or online banking and etc. Let's say you choose from online banking and you choose the as pay later payment installment for up to 6 months. You are buying a shoes that costs you 420 ringgit and you choose the monthly installment 6 months. So basically, the Shopee apps will cut down the amount of money from your online banking. Every month you gotta pay for 76 ringgit 30 cents for up to 6 months. That's how the Shopee Pay Later function. As clearly we can see what an advancement of technologies does FinTech has, which pretty much convenience and very ease of use. Last but not least, we are going to talk about the regulatory framework for FinTech digital payment solution in Malaysia. The first one is the Regulatory Sandbox. Regulatory Sandbox is one of the regulatory frameworks that is highlighted by Bank Negara Malaysia (BNM). The Regulatory Sandbox was established by BNM in October 2016. It is to give regulatory environment that is good for formation of financial technology and ease overall innovation in the Malaysian financial sector. The second one is the Policy Document on Licensing Framework for Digital Banks. BNM today issued the Policy Document on Licensing Framework for Digital Banks following a 6-month public consultation. BNM aims to enable the innovational application of technology to elevate the financial well-being of individuals and businesses and nurturing sustainable growth, especially in digital payments in Malaysia's financial system. Besides, it is also stated that the licensing framework for digital banks that run the digital banks have to comply with the requirement under the Financial Services Act. The next one, we are going to talk about the Financial Services Act 2013 and also the Islamic Financial Services Act IFSA. The FSA 2013 is an act to provide for the regulation and supervision of financial institutions, payment systems and other relevant entities and the oversight of the money market and foreign exchange market to promote financial stability and for related consequential or incidental matters. This act gives the authority to BNM to oversee financial institutions that are involved in the digital payment sector to comply with the standard and regulations given to achieve new innovations in digital payment sector. While for IFSA, basically focuses more on Sharia compliance to achieve financial stability in digital payments.
The next applications of FinTech in the Malaysian financial system is Digital Verification Service. The integrations of FinTech into Digital Identity Verification Service has improved the security and smoothness of online and account opening transactions among other financial transactions in Malaysia. RegTech or regulatory technology is the ingenious application of technology-driven solution in the Malaysian financial sector. Its primary aim is to streamline regulatory obligations, fortify compliance processes, and manage risk effectively through cutting-edge innovations such as AI, machine learning, data analytics, and blockchain technology. RegTech solutions are provided by a broad range of entities ranging from specialized startups and established technology corporations to financial institutions that are actively collaborating with tech firms. In Malaysia, several regulatory bodies oversee RegTech adoption and implementation. These include the Security Commission Malaysia, Bank Negara Malaysia, and the Malaysian Communications and Multimedia Commission. Each plays a pivotal role in ensuring adherence to regulatory standards. The Security Commission Malaysia oversees compliance with relevant rules and governs the capital markets and the security industry, Bank Negara Malaysia oversees and regulates financial institutions and payment networks, ensuring that financial regulations are followed. Lastly, Malaysian Communications and Multimedia Commissions oversees specific aspects of technological compliance in the telecommunication and multimedia sectors. Next is functions of RegTech in Malaysia. RegTech plays an important role by optimizing compliance processes, enhancing risk management, and ensuring regulatory compliance within the dynamic financial landscape of Malaysia. However, the integrations of RegTech in financial services encounters hurdles and risks. These include data security and privacy concerns, integrations challenges with legacy systems, adapting to evolving regulations, and managing initial implementations and maintenance costs. The next applications of FinTech in the Malaysian financial system is digital verification service. The integrations of FinTech into digital identity verification service has improved the security and smoothness of online and account opening transactions, among other financial transactions in Malaysia. However, the increased use of digital identity verification also escalates risks such as fraud, identity theft, privacy concerns, and technological vulnerabilities. Financial institutions must navigate these risks through robust security measures, respecting user privacy and complying with national and international regulations.
Good day to Doctor and everyone. My name is Ko Zeyuan, matrix number 277626. I would like to continue with the presentation. So as we know that FinTech is a recently emerged industry that leverages technology to provide inventive solutions for diverse financial industries. It has brought a substantial changes to the world of finance and offered an abundance of benefits. So without further ado, let's start with the advantages of FinTech. First and foremost, the existence of FinTech has provided a flexible way for individuals and businesses to conduct financial activities. So I'm saying so because FinTech is able to tackle the drawbacks of conventional banking by allowing customers and businesses to engage in their financial transaction at any time and from anywhere via online. So as well as the mobile application to mitigate the challenge of geographical constraints instead of the need for payment transaction to be made in person at a bank. So apart from that, it gives customers a way to constantly track their financial transaction, improving their overall control and management of their finances. In addition, the emergence of FinTech resulted in a smooth consumer experience as it employed technologies such as smartphone application to offer a variety of efficient financial service. For example, there are numerous of digital platforms including peer-to-peer transfers, mobile wallets, and mobile banking applications that allow the consumer to utilize their user-friendly platform to access the financial service. This has provided an outstanding consumer experience to the users due to the FinTech emphasis on the simplicity and accessibility, which ensure that the users can navigate these applications effortlessly regardless of their familiarity with financial system. Last but not least, financial institutions achieve operational efficiency, which is quite an obvious advantage resulting from the emergence of FinTech. So financial institutions can streamline their internal operation by adopting the advanced technology like automation and artificial intelligence. For instance, they utilize the chatbots driven by the AI to respond the common client inquiries as well as free up the workers to concentrate on more difficult jobs. In this way, financial institutions can accelerate service delivery to their customer while simultaneously lowering the possibility of human mistakes. Additionally, FinTech's advanced technology give banks and financial companies a valuable source of insights through data. Therefore, financial institutions can acquire a greater understanding of their consumers' behavior, preferences, and risk status. As a result,
This helps them make a smarter, more accurate decision and provide a more personalized and relevant services to their customers. I think that's all from my presentation. I will pass it to the next presenter. Thank you so much.
Good day everyone, my name is Tessie Ting and now I will present about the disadvantage of the fintech. There are three disadvantages of the fintech. The first is the scalability challenge, second is the security risk, and the third is regulatory compliance. The scalability challenge, as we know, the fintech relies heavily on technology to provide service to its customers, but the technology keeps updated quickly, so it will be challenging for fintech to keep changing with technology, and they should invest in new technology to increase their competitive advantage and to maintain software quality and adapt legal frameworks in different jurisdictions. Besides, the lack of IT infrastructure is also a significant problem in fintech service. There are still have many people difficult to access the internet due to weakness in internet connection. It is a problem for the person to make the transaction and leads to a decrease in the usage of this service. And for the security risk, the cybercrime is on the rising trend with new attacks happening during any unexpected time nowadays. So the data leakage, loss, tampering or theft can compromise the user's personal and financial information. These issues happen due to less secure and weak protection of the system, and the hackers can steal the customer data and information more easily for identity theft. For the regulatory compliance, there is a complex regulatory environment in fintech companies. To make sure they can provide fair and safe financial service, fintech companies should comply with and meet the requirements established by regulations such as the Foreign Account Tax Compliance Act (FATCA), Anti-Money Laundering (AML), as well as Know Your Customer (KYC) regulations, which can help to prevent financial fraud. However, it could be more challenging for fintech companies to keep up with the regulator change due to the innovation growth in the fintech industry. For instance, the fintech companies aims to integrate big data into their operations to enhance their ability to fulfill consumers' needs. There should be a significant change in the existing regulations framework. This would be more challenging for regulators to keep up with the change in the framework of the existing regulations and will lead to an uncertain regulation risk for fintech. That's all. Thank you.
Hi and a very good day, Doctor. My name is Darshan and my matric number is 285778, and I'm going to present about the importance of fintech in the financial system to the economic development. As we all know, in today's fast-changing world, fintech has transformed how we handle our finance and engage with financial institutions. So the first importance of fintech to the financial system and the economic development is promoting financial inclusion. Fintech is a bridging financial inclusion gap by providing access to financial service to the unbanked and undeserved population, particularly in the undeveloped countries. Mobile banking and peer-to-peer lending platform are enabling individuals to save, borrow, and invest, fostering the economic participant. Second, enhancing risk assessment and management. Fintech utilization of big data, AI, and machine learning algorithm is revolutionizing risk assessment and management in lending and insurance sector. This enables financial institutions to accurately measure credit worthiness and provide service to individual and small business that are previously excluded. Third, improving efficiency and financial transaction. Fintech is streamlining financial transaction, reducing costs and minimizing time through blockchain technology and automated algorithm. This is facilitating cross-border trade, easing administrative burden, and allowing government to better utilize resources. Fourth, stimulating innovation and entrepreneurship. Fintech is acting as a catalyst for innovation and entrepreneurship in the financial industry. It is forcing traditional banks to adapt and fostering the development of new fintech products and services. And lastly, promoting cross-border trade. Fintech is making cross-border transactions more efficient and cost-effective, facilitating international trade. Digital payment system, blockchain technology, and peer-to-peer platform are reducing barrier and lowering costs, enabling business to expand their reach and contribute. As a last point, fintech is transforming the financial industry and boosting economic growth. Fintech empowers people, businesses, and economies globally by fostering financial inclusion, risk assessment, transaction efficiency, innovation, and cross-border commerce. As the world becomes digital, fintech will continue to alter finance and the economy. That's all for me. Thank you.
In conclusion, fintech are improving effectiveness, efficiency, and smoothness of activities in daily life, and important in economic development that increase economic efficiency through mobile banking. Fintech is also important in globalization nowadays, which whole people in the world can trade it without border. So that's all for our group presentation. Thank you.